forward in terms of earnings, AMD has just reported, bad for it, down about 6-7%. Actually in line with what the options market was thinking. Of course, that's the general move. Apple is coming out here on Thursday, so be aware of that. And let's move over now to the rotation we've seen in recent hours. So it was a day of semi-defensives here. We had consumer discretionary flatlining because it'd been sold off so much the previous days, which we'll see soon. Then we have XLP and XLV, which are two defensives, healthcare and staples sitting out in front. Energy got bashed the most with the downgrades, and also just in general, I think demand destruction starting to play out. Very cool charts on energy charts. We've talked about it before last week. It was one of my strong plays. You know, obviously the concept here of commodities is, and demand destruction, I think, is one of the strongest plays that we've seen in markets recently. We've got here consumer, obviously technology and communications being the best 5-day average. Utilities and other defensives kind of settling around the middle to the lower side, and consumer discretionary, it's just up. But geez, I tell you what, considering how much Amazon was up and then it went down, overall it is flatlining across the board, and we'll see that very soon. Let's jump into the charts now and talk about all of the key levels. We'll kind of fly through a few of these as we talk about the FOMC event. First up, we've got here the equal weighted S&P 500. And the equal weighted S&P 500 realistically shows us a kind of, pretty negative side of things. I mean, obviously we breached through this high and we close above there now. We're probably moving towards 150. So that would be in line with some S&P 500 we look at soon. But you can see there's actually a small change of trend here. When we got back up into this level, we suspected there'd be sellers, and there has been on the equal weight. So the equal weight does look kind of negative. In some ways, people will be calling some of these things evening stars. And they're a decent pattern, and they're on the S&P 500 and everything. But I think the FOMC will override no matter what. NASDAQ versus the NASDAQ equal weight. You can again see how there's just a couple of companies here driving up heavier. When that's happened in the past, it hasn't really been positive with the markets. It's tended to lead into some negativity in the middle term, which is the next 1 to 3 months. And that's in line with some of the data we saw early in today's video when we went over 50 years of history. Consumer discretionary versus staples. This is effectively 1/3 of the US economy. It still doesn't look very good. It's usually you see consumer discretionary versus staples come with you in these rallies. So if you go back through, you look at the 2020, oh yeah, it was back on. You look at 2008, you can really see that nice pickup here in consumer discretionary versus staples, and it ran the entire period. When you go into these sideways points, generally that is a weakness in the market, and we actually saw slowdowns over 15, 16, and of course we saw slowdowns over that 18 to 20 period as well. So I always like looking at this chart, and it does show you that the market's kind of sniffing out that there is a lot of weakness here still, but they're betting on Fed support. And that's where the question is, will Jerome Powell stick to the plan? Will he actually do what he says and say, I'm going to actually learn from history and stick to the dot plot? If you're a bear, you need him to stick to the dot plot. That's the big thing here. And I just wanted to, again, just discuss that with the community. That's at least one of my main clarity positions when you're talking about it. And yes, of course, I still remain bearish over that period of time. Let's talk about the VIX here. Volatility did spike. Usually speaking, the VIX has been very good with, seeing like a 30, 35 VIX has historically been a pretty good time for market kind of bulls to come out and say, well, maybe now is an opportunity. We haven't seen a big spike since the first quarter. You tend to see Q3 usually be the next big spike. We are coming into a volatile event week, but I think it's being suppressed a lot by zero DTEs. So the VIX, not as much as it was. Let's move over to copper. This is a chart I'm watching heavily over the next week. So this is going to be a big one. Will copper finally break through these lows and move into this critical little box down here? If copper fails down here, let's say it actually closes below down here, this 3.7 level, then we're probably in a bit of trouble, especially for markets like the Australian market, and we'd be in trouble for a lot of those oil, metal stocks in general. Demand destruction full in play at that point. And look, it's been in line. We've discussed copper for a while. It's been a pretty good instigator of this type of stuff. And recently we saw that kind of break that looked real, and then all of a sudden it just slammed back down, got the nice close, didn't break above, And yeah, it's been on since then. So that's really where iron ore and other stocks started to move. US 10-year dropped, obviously bringing up treasuries and stuff. This will move quite a lot. Maintain pretty much 3.3 is the key level here. I would suspect the Fed come out and probably hit the, if I was to guess, I would say they probably hit the we'll use policy if needed. But we're going to kind of let it simmer for a while. So effectively say, well, we think we've done enough. We're going to sit there and not hike for a little bit, and then, but we may do it if appropriate. So that may hold the US 10-year in a tighter range, or at least the US 2-year in a tighter range as we find out what's going on. US dollar, this one here, look, it tried to get above. It's coming back down. We mentioned in the previous video that if it does breach this trend line, which it has, that basically drops may be met by buy demand. I could see it kind of coming in around this 101.30. This area here may provide some structural buying for the dollar. I'm not super big on the dollar into the non-farms. And here's the other one. Of course, gold went up heavy when yields dropped across the board. We saw big drop-offs on yields, and then all of a sudden gold loves it. Well, yeah, gold does really love, I've said this before, the correlation with yield dropping and gold is pretty strong. It came off, this is now the most heavily traded zone. So it came off this trend line that I've no doubt been weaker on recently. I remained neutral, and I still kind of do remain neutral. This is a fairly decent close though. So to get above 2015 is a line I've looked at for a while. And I kind of believe now that maybe drops might be met by some buy demand in the short term. I'd be actually looking for it to come back down into the heavily traded zone again to see if it can react there and then maybe get, a nice turn for day traders. Not too much on the horizon though for gold. I wouldn't be surprised at all for it to get slammed back down. Obviously, if it closes above these highs, well, we'll reassess gold at that point. It could be on a new breakout. But this is a nice closure above. And you can see on the daily, it actually cleared all the wicks. So that's a fairly strong one. It gets past all of these long leg dojis. The problem is really the news. And that's why, just for me, it was just neutral. I was just chilling and waiting for further events. At the moment, though, gold on the short term looks towards the bull side. On the medium term, I'm kind of negative on it. And on the, which is, 3 to 9 months. And on the long term, I am bullish on gold. Let's move over here. US oil. What have we got going on? Still weak. Looks terrible. I don't think there's an actual trade here for me. It's just like more of a continuation. If markets do pull back up, you'd probably expect in here for sellers to recommence. But this line here, it got so close. That was going to be an exceptional sell. But as I mentioned in other videos, my real sell for energy was stocks, and it came through big time over the last 24 hours, 4.34%. We actually saw ZOM as well. If you have a look at Exxon's chart, very nasty looking chart. I wouldn't be surprised at all for some rallies, but overall this is a pretty negative chart. You get here some false breaks to the upsides, basically a Wyckoff distribution at this point. You can see it's broken through. If we go down to something like the 2 hour, you can see there's a lot of extra volume that came through with this, which is the earnings. And then all of a sudden it's sold back off that level. So you've got a gap up, you've got a gap down, you've got an island reversal across a lot of energy stocks, including the index, and a drop. So I'd kind of expect rallies to be met by sell demand across most of these energy stocks, regardless of how everyone's been so bullish on them. Obviously, I turned negative a little while ago. Tesla, let's move over here. So another fairly poor day for Tesla. It held up pretty well considering both Amazon and Tesla were holding much better than the rest of the market. And that's because I think they were sold off so heavily recently. That's a pretty bad candle coming into it. It's still not above that white line. If we get above the white line and we close, I feel like we're probably going towards 180. That would probably mean the markets are getting above that 4220 zone and moving towards 4300, 4350. If we see the markets, where they are right now, we have to just believe they're going towards these gap fills. And I still maintain that 120 is very possible for Tesla. So we've kind of got possible return points here for both of them. And yeah, I mean, nothing looks super good for it. If it hovers again and then suddenly you get that gap up though, remember this would be a gap down, gap up, reversal. You should see some nice momentum trades. So I'm open as a trader. You've got to be open to both sides. I think both sides are available here on Tesla, and we'll see how it plays moving forward. Nvidia finally got a day of short in, not huge short, down 2.42%, still pretty good. It came up to this box that we're looking for the reaction. Actually gave an exceptionally good little entry point on the smaller time frames into the close of the session. If you'd shorted it, well done to you. It has left a gap behind now, which you can see on the charts here. And I think this is going to become important for FOMC event stuff. And we'll talk about that in a second. The initial reaction to the FOMC events has often been the wrong one. So we've seen it go off in one direction and then boom to the other direction, or off in one direction, then boom to the opposite direction. This is fairly common in news. And if it does occur, then you've just seen potentially a trap. So it's all about that idea of we don't really want to predict too much into these events. We instead want to react to it. We need to understand, though, what might be happening on both sides to kind of get a better idea of it. Apple overall, still not in the extreme level. No turn of trend. No real sign of significant weakness. Obviously, it's just a down day. So we'll come back to that as we get the earnings reports. ASX 200 for the Australian viewers out there. Look, it's pretty much exactly what I wanted to see. It's down. It's down pretty hard, which I thought it would be. And yeah, we got that nice switch. So I'm very happy with this. It actually hit first targets for me. And next thing is, and into the FOMC, that's pretty nice. If copper fails, though, expect the ASX 200 to also continue to weaken. So is this a buy zone for the ASX? No structure yet. Just fell off and is basically sitting here in the day. You want to look for daily closes. How have they closed? Those types of things, weeklies, etc. It's swung underneath all the stop losses that would be here, though. So there's a potential buyers may recommit. It's not strong enough. It's not replicatable, in my opinion. Let's move over to Rio. This is something that we've been talking about for a while. It's just an iron ore play, just to show you the power of that copper stuff. Here is the turn. That's the short day. And of course, it's going down. I still think there's more in Rio. It's not, I've kind of explained this to somebody recently. Unfortunately, it's not always like a Russell 2000 or an S&P 500 that is the best trade. Sometimes it is other markets, and I'm particularly fond of sectors, obviously. If you've been watching the channel, you'd know that. So yeah, in this case, the iron ore is looking still very weak. And I kind of feel like the first stop could be in here, though I have a suspicion it may even go lower down to the 96s with rallies being met by sell demand. Copper will be one to watch, though, for these iron ore plays. Let's move over to the DAX. Now, on the surface of it, pause the video, chuck in the comments, what do you think that looks like? Because you may be correct. It really does look like it's a Wyckoff. And this is where the market's getting super sneaky. Take a look. We've got a lot of wick purchases here, which is usually demand. We have the false break, question mark, at this point. And of course, we know that this market is, at a pretty big peak here. Now, we've seen this play out before with this one over here, where we got that break up. It sold off, it sold off, it sold off, it sold off, and actually went down fairly hard. Then roll reversaled here and came off this little block that sits in there. So that's what it came off last time. This doesn't exactly look strong, but if it does beat out this level and close, it's probably going to squeeze at that zone. So you've got to think, yeah, on the surface of it, this looks weak. FOMC is going to be very important to it. We'll come back to it. IWM at massive critical levels. This was the best short, in my opinion, this week in terms of markets. This was what I had. You can go back and watch the Sunday video or whenever I put it out. And basically, that was the level that I liked the most. This is a very good short zone, very replicatable, really excellent. Good target zone here in terms of the way we look at technicals, big daily close, significant level here. And if it closes underneath, rally should be met by sell, and it may be the actual internal signal that the markets are actually going bearish. So I do think that we've got a lot at stake here on the Russell 2000, and we'll be watching it. But look at the return for this year on the Russell. So this is December. That's all the run that happened in January, completely wiped. So see how it's the story of many markets. We'll look at that later on in videos, but this is totally different to what many people think. See, a lot of people, when you're talking about bearish action, if you just like tech stocks and the big tech stocks and you're just looking at NASDAQ or S&P because of that front load, you'd be like, this is the year. And yes, it is certainly going very well, but the actual internals of the market look disgusting in comparison. It's like literally two stories, and it's kind of bizarre. It's almost never been like this in the past, and that's what makes it such a tough market. Someone like Stanley Druckenmiller, who's pretty much the best investor of all time, he's come out and said, even himself, that this is the most confusing he's ever seen in his life. But I think there's one thing that's very interesting about whenever you're talking to